All right, guys, good morning and happy Monday. This is Taylor kicking things off for Monday, December 5th. Let's do a quick sound check here in the free room and on YouTube. What's up, Lee? What's up, Mirza? Andrew, I'll see you soon, my friend. Good morning, Mark. Good morning, Miss Lorna. All right, the whole gang is here. So, guys, here's a scoop. Take a quick look here at the market. I'll give you my game plan for the next few weeks here. Show you what I think are a few of the better looking setups in the market. But I do got to keep it a little bit short and sweet this morning. Got to run downstairs to the leasing office and sign my life away before the open. But if you're in the gold room, I will see you guys pretty soon here. So let us see. Quick look at the futures. S&P futures down about 0.5%. The QQQ futures down about 0.5%. The Russell down about 0.4%, and the Dow. The big bad Dowski. Dow Jones futures down about 0.5%. So all in all, pretty quiet. But for now, guys, my game plan is pretty much unchanged. I think the Bulls have got a pretty good chance here to take the market higher, at least into the end of the year, until we start to get some red flags and some warning signs. So for starters here, the dollar. Mind you, guys, I'm playing around with the MACD settings. Not sure if I'm going to go with 21.50.34 or 21.34.34. I'll keep you posted. But as far as the dollar goes here, for now, no warning signs that this is going to stop working in the favor of the bulls. Big break of structure, of course, on the daily chart. And to me, what's interesting is, the dollar's been such a strong trend. You would think like the first good test of that daily 200, they might try to at least fight that good fight, try to hold it up a little bit, which I guess you could argue they did a little bit. But, last week you kind of sliced through it like hot butter. And, I think from here, guys, as long as the dollar is under that falling daily 21 EMA, it all works in the favor of the bears. And I think the biggest signal is still that negative MACD crossover here on the weekly chart. Last time the dollar had a negative momentum cross on the weekly chart was when the market bottomed post-COVID. So no problems there for now. Quick look at HYG, Big G. All in all, pretty solid. Daily chart looks good. The 3-day chart looks good. What I would like to see here, positive cross on the weekly MACD. That'd be the first positive cross for momentum since the market bottomed in 2020. But for now, it all looks pretty good. Now, as far as the indices, right now, the poster child for a reversal versus a bear market rally is the Dow Jones. Dow's pretty much the first index to kind of step up to the plate. And I think showing decent signs, that might be the bottom. And now from here, instead of playing out this pattern of lower highs and lower lows, lower highs and lower lows, well, now you're taking out that previous swing high, and you got the first positive cross on the weekly MACD since, you guessed it, when the market bottomed back in 2020. So to me, that kind of points towards the potential. Maybe now from here, you get your next dip, then it catches a bid, the buyers come in, you find support, and we continue to trade higher. We pull back, we catch a bid, we continue to trade higher. That's a reversal. Lower highs, lower lows, lower highs, lower lows. Well, from here, if we can trade above that previous high, which for now, momentum does potentially support that idea, and the buyers come in on the pullbacks, well, maybe we're going to really reverse the trend here and start making higher highs and higher lows. To be determined, of course, but I say that to say the S&Ps and the Qs are not here just yet. And frankly, the S&Ps got a lot of room before they potentially shift that pattern of lower highs. Whoops. What the hell is that? There we go. Lower highs and lower lows. Lower highs and lower lows. So the S&Ps have got to trade up to and through 4,300 to reverse this weekly downtrend. And I don't think there's a chance we can do that if we don't get that positive cross on your weekly MACD. The daily chart's improved. The 3-day chart is even improved. And you're going to see that improvement on your lower time frames during these bear market rallies. So the key from this point moving forward in terms of, hey, is this just another bear market rally that takes you up towards your weekly 50 and we roll right back over? Or could we at least trade up to 4,300? Think you got to get that positive cross. And of course, the QQQ, same thing. Continuing to lag behind. So, a month from now, and mind you guys, it could all fall apart this week, right? But a month from now, we look up and the S&Ps and the QQQ have done what the Dow Jones has done. Positive cross on your weekly momentum and taking out the previous swing high. That's where things really get interesting as far as the tides might be a-turning. But for now, we're taking it day by day. And as we take it day by day, the key, of course, is how does the market handle the dips? So a good example would be, guys, on Friday, the S&Ps are down like 1% and change at the open. The QQQ is down, I think it was like 2.5%. But the bulls did a really good job of handling that dip. So the S&Ps, yeah, we gapped down. But we gapped down into a rising hourly 21. We've got our hourly buy signal. And the buyers came in right where they should. So at least on Friday, your S&Ps, even your QQQ, they handled that dip very well. And it's important that we continue to see that if the market's actually going to trend higher from here. What we've seen so much more of this year is here we go. The bulls are making progress. Couple of weeks, things are looking good. They're rebuilding structure. But then the first gust of wind totally knocks the house down. All pretty solid for now, guys. So keep on taking it day by day. But as far as a few setups here, we'll bang those out. So my favorite right now, which we're long in the mastery and the options room, is the solar ETF TAN. All right, so this puppy right here to the left, weekly squeeze with a buy signal. Buy signals on the 3-day chart, and you got buy signals here on the daily chart. So we went out to January, bought some calls, and we're looking for a push towards $90. Right. Get the big three of the big three. Weekly chart checks out, 3-day chart checks out, and the daily chart checks out. So right now you have full alignment from time frame to time frame, but the key is hasn't used up all that gas just yet. ExxonMobil is a comparison. I think the easy move is done and over with. The weekly squeeze already fired, so you already used up that gas tank. 3-day squeeze already fired. You used up that gas tank. Daily MACD goes negative. In a perfect world, we're taking the buy signals back here. And that gets us long before the 3-day squeeze fires and before the weekly squeeze fires. In other words, you're getting long, and that stock from time frame to time frame has got a full gas tank. I don't think ExxonMobil, up here at +2 on the weekly chart, has a full gas tank. TAN, on the other hand, all right, we got our buy signals on all these time frames, but we're still coiled up here in that weekly squeeze. So don't chase it, guys, but I think if you can get an entry towards that daily 21 EMA, think you go out to January, you go out to February, give that trade plenty of time. But right now, I do like that weekly squeeze. So we got some January calls there. And as far as a few solar stocks, the one that I think looks the best right now is EMPH. We don't have a position here. I would like one on a dip. So the big EMPH weekly squeeze, weekly buy signals, 3-day squeeze, 3-day buy signals, daily squeeze, daily buy signals. Locked and loaded from time frame to time frame. But as you guys can see, it goes up it was up like 7 or 8% on Friday. That 7 or 8% move on Friday takes you kind of up here towards +2 on the weekly. So to me, where's the ideal entry? As soon as that daily chart prints the buy signal. You're taking your fresh daily buy signal, but you're also getting long inside that 3-day squeeze. Full tank of gas. You're getting long inside that weekly squeeze. Again, full tank of gas. So if you can build your position around that 270 neighborhood, and you're catching this push towards 330, 340, you buy some calls, give them 30, 40 days till expiration. That's a double, if not even better. Now, is that to say that EMPH doesn't trade higher from here? Not at all. I think this trades much higher. But that's the easy move. Because once you're up here at +2 ATR, now there's that growing probability. We've got to come back home to that 21. That's why right now I'm avoiding the energy sector, saying, okay, I'll buy that on the next good pullback, and I'm a lot more interested in TAN. Locked and loaded, and it hasn't made that big push just yet. So at this point, I think EMPH probably a better entry on a dip, but it's a pretty powerful combo. 3 big squeezes, each of them printing a buy signal, and you've taken out the highs here. She got no roof. So I think TAN offers a better entry, but you could go with either or there, whichever one tickles your fancy. All right, guys, next up is ON. ON Semiconductor. And depending on how the cookie crumbles today, very likely going to be my next entry. So a lot of similarities here between ON and TAN. Weekly squeeze, weekly buy signal, and we're not all the way up here at +2. 3-day squeeze, 3-day buy signal, and we do have a brand new daily squeeze, and we got some daily buy signals. All right, so what does the squeeze tell us? 1 squeeze, 2 squeeze, 3 squeeze. Tells us ON is building up energy. Right, it's gearing up for its next big directional move. Or if you guys read Mastering the Trade, like John would describe it, it's gearing up for a bigger than expected move. And not to go on a side tangent, keep in mind we're playing 2 games here. We're trading the equity, but we're trading it through the options contracts. So expected move and things of that nature, they do play a pretty big role. So again, that's where you buy some calls inside a big triple squeeze. Each of them fire. You're getting a nice paycheck because of that bigger than expected move. That's the power of the squeeze. And then the buy signal tells us, well, it's a really good probability those squeezes fire to the upside. So I think from top to bottom, guys, this one looks pretty good. Just had earnings, so we don't got to worry about that coming up too soon. So I'm thinking January expiration, January monthly expiration, pick up some calls, maybe some put credit spreads. But again, the goal is take the squeezes, take the buy signals, and try to get position before that huge rip. Now, the move might not happen, but in terms of risk versus reward, I got to look at something like ON or something like TAN and say to myself, okay, in the short term, that's got more room for immediate upside, where I've got to think something like an ExxonMobil. As you guys can see, what's Exxon done for the last 1, 2, 3, 4, 5 weeks? Just kind of trade sideways. You're not getting destroyed here because it's going against you. You're getting destroyed because the move is over. Those calls you bought, they're losing value. Those puts you sold, they're not falling apart too quick. Right? That's the good stuff. You got to identify it early, build that position early. So, guys, what y'all can just do if you want, this is the scan. This is the scan. So share that up in the alerts. DOS scan. That on the YouTubes. And I will give you nothing but stocks that are printing that daily buy signal. So I think you guys might like that. But yeah, ON. January, February expiration. I'll price a few things out, some in-the-money calls, maybe some put credit spreads. But the goal is plant the seed early. Sit back and watch that bad boy fire. All right, so we got TAN, TAN/EMPH. We got ON, and next up is UNH. So you'll notice here on UNH, you don't quite have the same alignment you have in a TAN or an ON. We've got the squeezes, weekly squeeze, 3-day squeeze, daily squeeze. As far as buy signals go, the only thing we have right now is a buy signal on the daily chart. So I think a couple different ways you can play that. You can do absolutely nothing and wait until the 3-day squeeze has a buy signal. You can wait a little bit longer until the weekly squeeze has a buy signal. Right? You can wait around until it turns into the big 3 squeeze. Weekly, 3-day, and the daily. Or, or you can take that daily buy signal and just trade it with a tighter stop. Like, okay, I know we're not perfect over here just yet. We're not perfect over here just yet. But this starts to shape up. So let me work based on that daily buy signal, but do it with a little bit of a tighter stop. That'll be up to the trader, but I do think with patience, you eventually get your 3-day, you eventually get your weekly. Then it's a question of whether or not does it still have that fresh tank of gas. So if this trades between 550 and 500, and you get those other 2 time frames to go bullish, I think you got a full gas tank. If that doesn't take place until we're up here at 580, a little bit late to the party. So not one that I'm rushing into, but I like me a good triple squeeze. So next up, guys, is Johnson & Johnson, and kind of the same scoop here. 3-day chart goes bullish. Squeeze fires, so be mindful of that. We're using up some gas. 3-day chart goes bullish. Again, the squeeze fires. Using up a little bit of gas. Weekly chart has not gone bullish just yet. So no rush at all. But, a week from now, a couple weeks from now, this pulls back a little bit. And by the time it pulls back, you've got that buy signal on daily, 3-day, and the weekly. Should make for a pretty good buy the dip opportunity. So there's a few guys. Johnson & Johnson. The one I would most likely take an entry in today, Mama Market Willing, would be ON. We've already got a position in TAN. And I think as far as the solar names go, EMPH is a beast, and First Solar, of course, has been a beast as well. And that is the core of it, guys. So as far as like warning signs here, again, what I don't want to see is all of a sudden the dollar tries to rebuild. Back above the daily 200, back above that daily 21. We can afford to see a bounce here. What you can afford to see if you're bullish or you want to be long the market is the dollar trying to get back in the game. Want to see the Dixie keep on minding its own business. And, as far as the market goes, I think we're pretty good here, guys, above that daily 21 EMA. So we'll see what's up this week. As always, wish you all the best of luck. But we got about 5 minutes here, guys. If you have any questions or you want to take a look at any charts, drop them down in the chat here. Let's see, S&Ps. Oh, pretty quiet. The buy signal is the big 3 indicator. So that incorporates a couple different things. Some structure ingredients, some momentum ingredients, stacked EMAs, MACD. Good smorgasbord. So Mike, no, when I say buy calls, I mean just, straight up buying the call. So on TAN, for example, we just straight up bought the call. I think the 80 strike. But I will do a call debit spread sometimes as well. But yeah, if you hear me say call or buy a call, yeah, just usually buying the Delta 70s, buying them outright. All right, guys, looks like we are good on questions this morning, which kind of works out on my end. So, guys, I'll cut you loose here, keeping it short and sweet today. Got to run downstairs real quick, and then I got to take the good people in the options room through the open. Good news is, though, I will be back this afternoon. So if y'all are around, mind you, for those of you listening on YouTube, go to sumpertrading.com, sign up for the free room. You can catch me in there for a couple of times per week. Most of the traders are in there. So let me see, schedule. Yes, I will be back at 1 p.m. Central, 2 p.m. Eastern. So guys, have a good morning, good afternoon, and I look forward to seeing you in a few hours. Adios.